All right, let's dive into a really fascinating day on Wall Street. On the surface, you see the headline screaming record high, but there's a huge catch, and that's exactly what we're going to unpack today. Okay, so let's talk about the stock market for September 10, 2024. It was one of those days that looked amazing at first glance, right? A total celebration. But if you dig just a little deeper, a totally different, much more confusing story starts to pop up. So yeah, the big story, a record high. But, and this is a big but, that one single number is hiding a whole lot about what's really going on in the market. I mean, look at the number. The S&P 500, the big benchmark for the whole market, climbed 0.3%. Now, that doesn't sound like a lot, but it was enough to close at a brand new all-time high. So we should be popping the champagne, right? Well, not so fast. It's really not that simple. And that's really the big puzzle we need to solve today. If the market just hit a new record, why was everyone feeling so weird about it? It felt like the market was in a massive tug of war, and the final score just doesn't tell you the whole story of the game. Okay, so let's start with the good news. And boy, was it good. Pretty much all of the day's gains came down to one company, just one, and the absolute mania surrounding the AI boom. We are, of course, talking about Oracle. Get this, Oracle stock went up almost 36% in one single day. That's not just a jump, that is an absolute explosion. A move that big sends shockwaves through the entire market, especially the tech world. So why the huge pop? Well, it was a perfect 1-2 punch of amazing news. First, they came out with this incredibly optimistic forecast, basically saying they expect to make a whopping $114 billion by 2029, all thanks to AI. Then, bam, they announced a massive deal with OpenAI, the ChatGPT folks, to provide them with cloud computing power. This basically stamped their ticket as a major, major player in the AI infrastructure game. And Wall Street just went nuts. I mean, analysts who see this stuff every day were just blown away. One strategist, Gil Luria, put it perfectly. He called Oracle's performance absolutely staggering. And, that really says it all. And this is cool. Oracle's good news didn't just stay with Oracle. It created this awesome ripple effect. See, investors are smart. They thought, wait a minute, if Oracle's going to be building all this AI stuff, what do they need? They need chips. And just like that, shares of chip makers like NVIDIA and Broadcom took off too. It's all connected. Okay, so that was one half of the good news story. The other half was just as big, maybe even bigger. We got some really surprising and frankly fantastic news on inflation. Now, the report was about something called the Producer Price Index, or PPI. All you really need to know is that this tracks the prices that businesses pay for their supplies. Think of it like the wholesale price, what things cost before they even get to the store. It's a great clue for where the prices we pay are headed next. And here's the surprise. Everyone, all the experts, they were expecting prices to go up by 0.3%. But what actually happened? They fell. They went down by 0.1%. That's a huge swing. It was a clear sign that maybe, just maybe, inflation is cooling off way faster than anyone thought. So why does this matter so much? Well, it all comes down to the Federal Reserve. When inflation is low, the Fed has room to cut interest rates. And lower rates are like rocket fuel for the stock market. In fact, the data was so good that the famous economist Mohamed El-Erian said the Fed should be thinking about a big rate cut, like right now. All right, so far, so good, right? We've got a monster AI rally, we've got great news on inflation, so the market should be flying high across the board. But it wasn't. This is where we get to the catch. Let's look underneath the hood and see what was really going on. For starters, look at the biggest names in the market, the so-called Magnificent Seven. They were all over the place. Apple was actually down big, over 3%. Amazon was down too. And Microsoft and Alphabet basically went nowhere. The party was really only happening for a few AI stocks. Everybody else was just kind of standing around. And this right here, this is the real problem. Even though the S&P 500 index hit a record, way more individual stocks actually went down for the day than went up. It's what people on Wall Street call weak market breadth, and it's a huge warning sign. I love this analogy. It's like the generals are charging up the hill, but most of the soldiers are actually retreating. That's not how you win a war, and it's not a sign of a healthy market. So what are we supposed to make of all this? This one day really showed us the two giant forces battling for control of the market, and it puts a spotlight on some pretty big risks we all need to be thinking about.
Okay, so here are the two big things to keep on your radar. First, that great inflation number. Could it actually be a bad thing? Could it be a sign that the economy is slowing down because people just aren't buying as much stuff? And second, with the whole market being propped up by just a few super expensive AI stocks, is it just too pricey? Is it just waiting for a reason to fall back to earth? And that's the bottom line. The market is stuck in this epic tug of war. On one side, you have the unbelievable power of the AI boom pushing a few companies to the moon. But on the other side, you have this nagging fear that the rest of the economy, the normal stuff, might actually be in trouble.
Which brings us to the big cliffhanger. That PPI number told us what businesses are paying, but the next big report is the Consumer Price Index, the CPI. That one tells us what you and I are actually paying at the store. So what's that number going to say? Is it going to confirm that inflation is really cooling down, or is it going to throw a whole new wrench into this already confusing picture? That's what everyone is waiting to find out.